What a crazy, crazy time in the market right now. As I've said for many, many months now, the market goes up, the market goes down. Hey guys, welcome back. Last week I talked about the craziness of the market, and it looks like this week it's continuing on just as it has been, where we see these drastic swings almost, but not quite, almost on a daily basis. And one of the comments that I made last week was that I sure hope you're buying on the downswing. As much as I never suggest people try to time the market, there is sometimes when it's so blatantly obvious that we're in the middle of a swing when it is a good time to buy. Stick around and let's talk about that. So, let me start this by saying I am not a professional, nor do I profess to be a professional market advisor, so to speak. So take this with a grain of salt, if you will. But last week I found it kind of interesting, maybe 2 weeks ago now. One of my people on Facebook commented back on one of my posts when I was talking about Fortis and how it was a great time to buy last week when we were in the middle of a downswing. We got into a little bit of banter about it. And yes, I know I should probably just let this go. But this week, the market is proving out what I had commented about. And what I've done here is I've printed off the 5 day price for Fortis. And just so you know, we are in the middle of the trading day right now on Wednesday. I'm on vacation this week, so it allows me to make these videos during the day, which is nice. But on Thursday of last week at 3:30 in the afternoon, Fortis was trading at $53.01. Currently, right now, and you might even see this update live, it is trading for $54.51. That, in my opinion, looks like a $1.50 swing. So if you had bought in a single stock last Thursday, it's now worth a $1.50 more. And so I respect the comments that Fortis might be overvalued or overpriced. However, we are now sitting at a $1.50 increase of the king of the Canadian stock market, Fortis. So, as I said, the market goes up, the market goes down. And if you're looking at the screen here, if I go back and look at Wednesday, August 2nd, yeah, that might have been a bad time to buy because it was trading at $54 and change, or $55 and change, excuse me. But when you see this general downswing here, and again, I'm not a professional chart reader either, but you can clearly look and see that that thing was going down. And obviously, I know it's got to go back up. Maybe I don't hit the exact bottom, but if I had hit the bottom, I'm up $1.50 per share. And I don't know about you, but I typically don't buy one share. So, suck it up. Let's have a look at Couche-Tard. Same deal. If you were looking at Couche-Tard and looking to buy it last week on Thursday, let me just try and get the arrow here. Actually, it keeps popping into Friday, but let's look at Thursday or Friday, $65.37. And today, the following Wednesday, with Monday being a holiday, it is currently sitting it just actually changed as I'm talking, $67.34. So we're 3 cents short right now of a $2 gain in a matter of what, 2 trading days? And again, I'm not saying or I'm not showing these things to beat my chest thinking I was right, because I know these are going to go back down again as well. What I'm saying is, if you are truly invested in a stock like I am, and I mean invested in the sense that I love these companies, they're awesome. They may or may not have a great dividend yield. They may or may not have a great growth trajectory, in my opinion, and other analysts that I read. But if you are heavily invested and believe in those companies, a $2 swing is quite a good opportunity for you to go and grab more of that stock that you love so much. And so, as I said, I know that this stock is going to go back down again. And you know what? I may even get more then too. The point being is that if the companies are solid enough, take that opportunity on the swings to grab a little bit more. And you might miss the low. It might even go lower. Well, if you have the funds, grab a few more. Last one, I promise. Let's look at Exchange Income Corporation. If I was to go in and look at purchasing some of these stocks last Thursday, $48.57. Today, live on Wednesday, I can pick up a share for that right now for $49.53. And again, I'm $4 off of a dollar per share in 2 trading days that I would have earned from buying more Exchange Income Corporation. And the other thing that I just would note on the screen, again, this is just a target, but an estimate target, if you look at the bottom in the middle there, 1 year target estimate, $67.05. That means that these analysts, now this is Yahoo, but these analysts are predicting that in a year, potentially, Exchange Income Corporation could get to $67. So you had a chance last week to buy it at $48 and change, and it's already gone up a dollar this week. Again, I don't beat the chest. I'm just saying the stock has dropped. The stock is rising yet again. And if you look at that 5-day trend of price, you can see that it goes up and it goes down. And if we expand that out into months and years, you're going to see the same darn thing. And what my point is in this entire video is look for those patterns, look for those drops and those gains. You obviously want to get the stock whenever you can if you really, really like the stock and believe in it over time. But the market right now is just so whacked out. It looks like it's giving us opportunities on a weekly basis to grab some stocks on the dip just to watch them go back up next week. And again, I don't say this as investing advice. I'm just giving you some knowledge that you can start to look at these charts and start to follow the market with the stocks that it is that you're interested in. Right here, I just gave you 3 examples of stocks that I'm invested in financially and invested in that I believe all 3 of them are going to do well for me over time. And the one thing that I really maybe didn't say is when you buy those dips, you're also potentially increasing your dividend yield that you're getting. So when you buy some shares of these stocks, when they go in these little dips, if you're bringing down your average cost per share, you're also then increasing the yield of the dividend that you are returning or receiving. And in the example of Exchange Income Corporation, the current yield on the current price right now, by the way, is 5%. And I know there's GICs out there that are giving you 5%. But my own opinion, not any advice, my own opinion, I don't think we're going to see those 5% yields on GICs forever. And so I also believe that that 5% yield is just a portion, based on my investing strategy, it's a portion of the return that I'm going to get because I truly do believe over time, while it may not hit $67 as a return in share price, I do believe it's going to go up from its current price of just under $50. So that will wrap up this video session. And I want to thank you all for sticking around. I want to thank you all for subscribing. As I always say, this has not been investing advice. And as I always close, if you have enjoyed, this video, please consider hitting that Marksy's Place icon and subscribing to the channel. I'm coming up on 400 subscribers, and I think I've been putting these videos out since March or April. I don't even remember, to be honest with you. And I'm completely blown away by the number of people and the comments that they do make on the channel, on Facebook as well. Maybe not as much, but I do appreciate everyone out there subscribing. Until next time, take care, and we'll talk to you soon. I'm going to enjoy the rest of my vacation.